So on Reddit, they have this group called Wall Street Bets, which has now got 7 million people in there. And they've been targeting Wall Street, the big hedge funds that have been shorting stocks. And they've been using platforms like Robinhood to leverage up using call options to basically push the price of those stocks that have been shorted by the hedge funds up, which means those hedge funds then have got losses and they've got to go out into the market and buy back the stock that they shorted and already sold, actually creating those losses. And because of that buying, you've just got exponential buying, and so you've got this squeeze which just sends the price of these stocks skyrocketing. And now they're targeting silver. Late last week, that's now their target. And because silver is the most manipulated and shorted asset class in the world, from the data that I've looked at, and JP Morgan is the one that they're after. So this is from the Wall Street Bets forum in Reddit. The biggest short squeeze in the world, SLV silver, from $25 to $1,000. And this is what they're looking at. They're looking at pushing the price of silver up to $1,000 an ounce. This video is about silver going to $5,000 an ounce, and we'll have a look at that later on in the video. But for now, let's have a look. What is this Wall Street Bets? What are they trying to do? Is it possible to pull off? This is part of that forum in there, and GameStop is a distraction. GameStop nails a hedge fund, yet silver nails the monetary system. And these kids, it's not all about profit for them. In fact, if you read their posts, you'd actually say that they don't want to make a profit. They're not interested in making a profit. They want payback for Wall Street. They want payback to the monetary system that screwed them, or screwed their parents really, back in 2008. But anyway, I digress. So now there's the silver wars. Wall Street Bets are these individual traders. Soon to be, I think, 10 million of them. And they've now targeted silver. And they're going up against all the banks, all the bullion banks, JP Morgan being the big one. And they're buying SLV shares and $35 strike calls expiring on the 16th of April. And this is the war that's going on. So have you ordered your Crash JP Morgan and Buy Silver TV shirt, t-shirt? I certainly have. Anyway, let's have a look at what this is all about, and is it possible? Is a silver short squeeze possible? Well, according to James Anderson, short silver squeeze is possible indeed. Now, I'll put a link of this article in the description below so that you can watch his video later on. But let's have a look at what he's written here. I spent the last few months reading through some lovable autist due diligent posts and Wall Street Bets tarred memes. So what he's saying there is on Reddit in the Wall Street Bets forum, basically, yeah, check it out. You read their posts and whatever and see what they're saying. Yeah, they're pretty full on. Creative and clever those youngsters are. We have reason to be optimistic. Truly a pack of funny, self-deprecating savages intent on tendy moonshots and of dark humour. Lost porn. So what they do is in there, they celebrate their losses. So no one shares their gains and their wins. No one shares, I made 1,000%, 10,000%, or I turned, my $600 stimmy check into 30 grand. Or no, they actually celebrate people that make losses in there, and they call it lost porn. I might have found a new financially entertaining bookmark for years to come. Openly mocking mentally ill Wall Street riggers is a fun pastime. Like when alleged insider traders like Leon Cooperman are often too brain damaged to skillfully speak in public anymore. Another fun thing is to use any complacent rigged financial shearing systems to your pack's advantage. Now that some of the Wall Street bet players have done so, look out for the more coming from the now nearly 7 million degenerates and growing. And that's it. It was like under 2 weeks ago, there was only 2 million of them. In the last week, I've noticed them go from 4 million to 5 million to 6 million to 6.5 million to now 7 million. And they reckon there's going to be 10 million of them within the next week or two. So, they are a big player. So it's these, millions and millions of individual investors coming together and using their power to get back at Wall Street. And a lot of them are angry. This goes back to 2008. You read their posts. They talk about how their father lost his concrete business. Other people, their parents, lost their homes. And so these kids were around in 2008 seeing the devastation done to their parents, and they talk about how they watched Wall Street get away with it. No one went to jail. In fact, they got bonuses, they got bailouts. And this is what we're seeing in society, this wealth inequality, but this separation, this social unrest. This is really Occupy Wall Street, but now instead of just protesting outside Wall Street, they're actually using these trading platforms to get back at Wall Street. So in a way, I'm cheering them on for sure. Personally, I still got some silver bags from 2011 showing a potential fiat paper loss. But since my diamond hands are strong as I just moved onwards, consistently stacking silver bullion last decade, not selling squat, akin to how JP Morgan did. Us respectively aggressively acquiring silver bullion after their naked short silver squeeze scare got going in late 2010 and peaked in late April 2011. Hand me the bag. So once again, this is the video that I just showed of Max Keiser, where he was explaining, and his next Wall Street insider, explaining what JP Morgan was doing on the short position and using that short squeeze so that they would have to buy back the physical. We saw that price of silver really skyrocket up to nearly $50. And I've shared in other videos before where I use that trade to where I turned $45,000 into 6 investment properties using that play right there. Now that the momentum has finally and clearly turned in the precious metals complex, the endless QE has more than doubled the fiat Fed note M2 pile since 2011. Once we get past $50 ounce of silver, get your mind right for the likely exponential silver price mania phase that follows. And this is the video to watch. It's about a 15-minute video, so I'll put the link in the description below, and in your own time you can watch that. January 2021 silver investment demand now over 65 million ounces, and I'll go into that a little bit more shortly. What's interesting is the record SLV, I'll talk more about this in a sec as well, had 34.4 million ounces silver inflow yesterday alone. So what I mean by that is Friday. So when I say yesterday, I mean Friday. And I'll talk a little bit more about that in a second. Also, there's it's a radio, Palisade Radio, where James Anderson talks about the record bullion sales creating shortages, and also I'll talk about that in a sec as well. So there you go. That's James Anderson's take, and is a short squeeze possible? He's saying there is, and we've got a bit of data that backs that up, which I'll share in a sec. So this article is more than 10 years old. I Want JP Morgan to Crash by Silver, written by Max Keiser. And basically what Max was doing is exactly what these Wall Street Bet Reddit traders are doing today. But back then, there was no, Reddit, Wall Street Bets group in the size of what it is today. Yet this campaign was able to get the price of silver to hit almost $50 an ounce. But we'll have a look at his video. So I'll put a link to this article in the description, but I'll just show you a little 1.5 minute video which he did that was part of this piece back then.
Hi, this is Max Keiser, host of the Keiser Report. I want to talk to you about this global viral campaign, Crash JP Morgan, buy silver. The fact is that JP Morgan is a huge player in the derivatives market. They've got a balance sheet exposure of something like 1.5 trillion. A lot of that is tied to their silver shorts. That is to say, they have sold silver contracts that don't exist. They're engaged in naked short selling. This is a form of counterfeiting. Huge hedge funds around the world are buying lots of silver because they know that if they force JP Morgan to have to buy silver in the open market, they're going to make money. So what I'm saying is you can piggyback on these huge players. All you need to do is buy one silver coin, maybe two silver coins, demand physical delivery of that silver, thus forcing JP Morgan and these other financial terrorists to have to cover their negative bets and put a company like JP Morgan basically forcing them into bankruptcy, because there's no way they can cover their liabilities if we all buy one silver coin and demand physical delivery. Put JP Morgan, a financial terrorist, out of business. Buy silver.
So we've got these massive short interest, in fact, record levels. 47 million shares are shorted on AG. AG is just a ticket code for First Majestic, which is a large silver miner. So you've got, Wall Street basically, and I'd say JP Morgan, that are shorting the heck out of this stock. And actually its share price late last week really started to jump up as I believe these shorts started covering their positions. What we have seen is that SLV, which is BlackRock subsidiary, iShares, manages the silver trust. It's the oldest ETF that contains physical silver. Usually it trades with volume of around 11 million shares. And apparently is backed by physical silver by a third party, but who knows? It's all a bit dodgy there. But what we can see is that the silver volume was 10 times the gold volume on Friday. This has never ever happened before. So these Wall Street Bet guys, the Reddit traders, they are fighting back. They said they're going to come after silver, come after JP Morgan, and it seems that they're doing it. So here's the SLV US equity. So this is that iShares silver trust that I just mentioned, and have a look at the flows into that. Record flows. just late last week. This is only just starting. So we'll see where this goes, but it's happening. It's happening. So this is the Sprott Physical Silver Trust. So I definitely have a lot more confidence in the Sprott, Eric Sprott and his company in holding actual physical bullion. They've definitely seemed a lot more reputable to me. But what's interesting here is, the Sprott Physical Silver Trust had 5 times their normal volume based on what's happening with Reddit just in the last couple of days. 5 times its normal volume. And, all this sort of stuff, really, if it skyrockets because of this short squeeze play, then obviously I'm going to be very happy. However, I've never jumped into any of these other stocks like GameStop and all this simply because the Reddit crowd are piling in. I like to buy things, as you know, that are undervalued, that are cheap, and I buy silver because of the fundamentals. And if this short squeeze happens, well, great, that's a bonus. But this has just come out, another fundamental. So I've talked about the greenwash and the electrification of our economy moving forward, and how silver is going to play a big part in that. And so the demand for silver is only going to go up while we've hit peak supply in 2016. So supply of silver just goes down from now on out while the demand goes up. So obviously, just from the fundamentals, that's why I buy it. As well as obviously the store of value and what central banks do and the banking system with this fiat currency system that we're in. But Samsung researchers have come out with this new battery, which has a silver carbon composite layer. David Morgan from the Morgan Report basically says people have no idea what silver will be worth in 5 years' time. So, and that's why I invest in that. The other interesting thing that's kind of mind-blowing with what's happening with this short squeeze is there's almost 34.5 million troy ounces that were put on just on Friday. And to put that into context, the amount of silver mined in 1 week is just over 16 million ounces. So 2 times the amount of silver mined in 1 week was purchased just via that SVL in 1 day, that SVL iShares ETF in 1 day. So, the buying that's going on, and there's talk that that the paper market is 250 times the physical market, so 250 paper claims on 1 ounce of silver. I just think that's quite incredible there. Daniela Cambone tweeted this out. Anybody bought gold maples lately? She says if there's a 45-day delay, and if you have a look here, out of stock. So go to your local bullion dealer, go online, have a look at their stock, and you'll see that a lot of their stock, you can't buy it. It's out of stock. There is a supply issue in silver. What was it, the beginning of last week, the week before, I bought some silver coins from my local bullion dealer, 1 ounce silver coins for $38. Some friends of mine just the other day went to the same dealer to buy the same coins, and they were in the mid 40s. And so we're seeing just a premium on these coins going up since then. Now, what's interesting is when you look at monetary scholars and look at that ratio, the gold silver ratio, you go through time, you can have a look how the gold to silver ratio has changed, whatnot. In more modern times, and when I mean modern times, I'm talking the last few hundred years, it's usually been around that 15 to 1. The economist Adam Smith said that 15 to 1 is the right ratio. Obviously, President George Washington fixed the US gold to silver ratio at 15 to 1. But if you have a look at the gold silver ratio, it's like in the 70s. So 70 ounces of silver to buy 1 ounce of gold. However, if you talk to the miners, they're saying that what they're mining is actually around 8 to 1. So that's actually the true ratio at the moment. And so if you look at the price of gold at the moment, which also we believe is being artificially pushed down, is around 2,700 an ounce in Aussie dollars. Then that implies, at an 8-to-1 ratio, that implies that silver should be around that $300 an ounce mark. Now, more and more experts that I follow are definitely saying that $100 silver, just on the fundamentals, this isn't taking into account what these Wall Street bet folk are doing. This is before they came along in the silver market. That $100 silver is the target, triple digit silver, and obviously that will be an all-time high. But just on the fundamentals alone, and that's why I look at that amongst all the other things and demand for it and the supply for it, and I say, well, at when I was buying it at $12, $15, $17, $20, $23, $24 even, that silver was severely undervalued. Now we've got silver around $34 Australian. We're seeing premiums on coins, 1 ounce coins in the mid 40s now, even high 40s for some coins. And so I see upside from here, and that's why I like to buy silver. The Wall Street bets crowd is just an added bonus. So I'll put a link in the description to Chris Iron's podcast, Cloth Raven, where he talks with Andy Scheckman, where Andy blows the lid off the metals manipulation and talks about $200 silver really being the true fundamental value of where silver should be. And Andy is a dealer himself. He runs his own precious metal dealership in the US. And Chris always has a great podcast, coming from an Austrian economic background and professional investor. So I'll put a link in the description of this below. Reddit preparing to unleash world's biggest short squeeze in silver. While all eyes have been focused on GameStop and a handful of other heavily shorted stocks as they exploded higher under continuous fire from Wall Street bets traders, igniting a short squeeze coinciding with a gamma squeeze. The last few days saw another asset suddenly get in the crosshairs of the Reddit raiders, which is silver. On Thursday, we asked, is the Reddit rebellion about to descend on the precious metal market? Well, the answer is yes. Silver bullion market is one of the most manipulated on earth. Any short squeeze in silver paper shorts would be epic. We know bullion banks. We know bullion banks are manipulating gold and silver to cover real inflation. Both the industrial case and monetary case, debt printing has never been more favorable for the number one inflation hedge, which is silver. Inflation adjusted silver should be at $1,000 instead of $25. Why not silver? Why not squeeze SLV to real physical price? Think about the gains. If you don't care about the gains, think about the banks like JP Morgan you'd be destroying along the way. And so these are the posts that are in the Wall Street Bets Reddit forum, if you see that. So one of the Reddit users, the Happy Hawaiian, went through and posted on Reddit his thesis on this. So let's have a quick look at this. So the short squeeze, buy SLV shares or the Sprott physical shares, and SLV call options to force physical delivery of silver to the SLV vaults. The silver futures market has oscillated between having roughly 100 to 1 and 500 to 1 ratio of paper traded silver to physical silver, but let's call it 250 to 1 for now. This means that for every 250 ounces in open interest in the futures market, only one actually gets delivered. Most traders would rather settle with cash rather than take delivery of thousands of ounces of silver and have to figure out how to store and transport it in the future. The people naked shorting silver via the futures markets are a couple of large banks, and making them pay dearly for their over-leveraged naked shorts would be incredible. Not Melvin Capital on the other side of this trade. It's JP Morgan. Time to get some payback for the bailouts and manipulation they've done for decades. Look up silver manipulation and finds that JP Morgan has paid over the years. And JP Morgan has just recently paid a $920 million fine to resolve market manipulation probes. However, they've been fined over and over and over and over and over again, but they keep doing it. Why? Because that $920 million profit was nothing to their $920 million fine was nothing to their $10 billion profit. The way the squeeze could occur is by forcing a much higher percentage of the future contracts to actually deliver physical silver. There is very little silver in the COMEX vaults or available to actually be used to deliver. And if they have to start buying en masse on the open market, they will drive the price massively higher. There is no way to magically create more physical silver in the world that is ready to be delivered. With a stock, you can eventually just issue more shares if the price rises too much. This simply isn't the case here. The futures market is kind of the Wild West of the financial world. Real commodities are being traded, and if you're short, you literally have to deliver thousands of ounces of silver per contract. The holder on the other side demands it. If you remember oil going negative back in May, that was possible because futures are allowed to trade to their true value. They aren't halted, and that's what will make this so fun when the true squeeze happens. Edit for more detail. Let's say there's one future seller who gets unlucky and gets a buyer who actually wants to take delivery. He doesn't have the silver and realizes it's all of a sudden damn difficult to find some physical silver. He throws up his hands and just goes long a matching number of future contracts and will demand actual delivery on those. Problem solved, because he has now matched the demanding buyer with a new seller. The issue is that the new seller has the same issue and does the exact same thing. This is how the cascade effect of a melt-up occurs. All the naked shorts trying to offload their position to someone who actually has some silver. My goal is to ensure that I have the silver and won't sell to them until silver is at a far higher price due to the desperation. The silver market is much larger than the GME, the GameStop, in terms of notional value. But there is very little physical silver actually readily available. Think about the difference between total shares and the shares in the active float for a stock. And the paper silver trading hands in the futures market is hundreds of times larger than what it is available. Thus, when they are forced to actually deliver physical silver, it will create a massive short squeeze where an absurd amount of silver will be sought after to fulfill their contractually obligated delivery, with very little available to actually buy. They are naked short selling, which apparently is illegal, and will have to cover it all once, and the float as a percentage of the total silver stock globally is truly minuscule. Now the fundamentals, the current gold to silver ratio is 73:1, meaning that price of gold per ounce is 73 times the price of silver. Naturally occurring silver is only 18.75 times as common as gold. So this ratio of 73:1 is quite high. Until the early 20th century, silver prices were pegged at 15:1 ratio to gold in the US because this ratio was relatively known even then. In terms of current production, the ratio is even lower at 8:1, meaning the world is only producing 8 ounces of silver for each newly produced ounce of gold. Global industry has been able to get away with producing so little new silver for so long because governments have dumped silver on the market for 80 years. But now their silver vaults are empty. And at the end of the World War II, government vaults globally contained 10 billion ounces of silver. But as we move to fiat currency and away from precious metal-backed currencies, the amount held by governments has decreased to only 0.24 billion ounces as they dump their supply into the market. But this dumping is done now as their remaining supply is basically nil. The 0.24 billion ounces represents only 8% of the total supply of only 3 billion ounces stored as investment globally. This means that 92% of the gold is held privately by institutions and by millions of boomer gold and silver bugs who have been sitting on meager gains for decades. These boomers aren't going to sell no matter what because they see their silver cachet as part of their doomsday prepper supplies. Now, I did a video on the Great Reset and I talked about having some gold and silver, physical gold and silver. You can call it doomsday prepper if you like. I just call it, being prepared, I guess, for whatever might come. It's locked away in bunkers they built 500 miles from their house. Also, with silver at $23 an ounce currently, this means all of the world's investment-grade silver only has a total market cap of $70 billion. For comparisons, the investment-grade gold in the world is worth roughly $6 trillion. This is because most of the silver produced each year actually gets used. As I've mentioned, $70 billion sounds like a lot, but we don't have to buy all that much for the price to go up a lot. So when we have a look at this visual capitalist comparing the world's money and markets 2020, so when you look at it from a visualization, each square is worth 100 billion of that size. Now silver, and this is at a spot price of 17.20, so we just looked at the so it's kind of what, about 70 billion. So it'd be still not that size, put it that way. And when we look at everything else in comparison, Fed's balance sheet, that's even bigger now. Billionaires, gold market, Fortune 500, stock markets, currency supply, global debt. So this is our bond market. And you can see that the bond market's much bigger than the stock markets. Global real estate, global wealth, and derivatives. Now, let's have a look at this. Now, people say that it's about double that now. It's about a quadrillion, the derivatives market size. And remember, derivatives is the paper market, and there's a lot of this that is on that silver market. So when you multiply, and we said about 250 to 1, so for 250 paper contracts for 1 ounce of silver, that's the distortion that we have. And look at the size of the derivatives market, and we believe it to be 1 quadrillion. Look at the size of it. So that's it. That's the size of the derivatives market. And when we go back and compare it to the physical silver market, let's get up there. We're getting there. And there's the silver market. Yay! So if the squeeze happens, it would be like 40 years worth of their gains in 4 months. The reason that only 8 ounces of silver are produced for every 1 ounce of gold in today's world is because there aren't really any good naturally occurring silver deposits left in the world. Silver is more common than gold in the Earth's crust, but it is spread very thin. Thus, nearly every ounce of silver produced is actually a byproduct of mining for other metals such as gold or copper. And that's true. Most miners, silver miners, so here in Australia, South 32 have got one of the largest silver mines in the world, yet that's a byproduct, and that only makes up, I believe, around 8% of South 32's revenues. Thus, nearly every ounce of silver produces is actually, I've read that. This means that even as the silver price skyrockets, it won't be easy to increase the supply of silver being produced. Even if new mines were to be constructed, it could take years to come online. And as someone that invests in explorers in the mining space, it's so true. It takes a long time from an explorer to find the deposits, then to go through the government approvals, so all the drilling and that they have to do, then go through the government approvals just to get there, and then they've got to construct the mine and raise capital to pull it out, and then that's not an exact science either. So you really find out whether their estimates from their drilling is accurate or not. Finally, most of this newly created silver supply each year is used for productive purposes rather than kept for investment. It is used in electronics, solar panels, and jewelry for the most part. This demand won't go away if the silver price rises, so the short sellers will be trying to get their hands on a very small slice of newly minted silver. The solar market is also growing quickly, and political pressure to increase solar and EVs could provide more industrial demand. The other part of the story is the faster moving piece, and that is the inflation and currency debasement fear portion. The government and the Fed are printing currency like crazy, debasing the value of the dollar, so investors look for real assets like precious metals to hide out in, driving demand for silver. The $1.9 trillion stimulus passing in a month or two could be a good catalyst. All this currency combined with the reopening of the economy could cause some solid inflation to occur. Once inflation starts, it often feeds on itself. Now, what to buy? I'll be putting 50% directly into SLV shares and 50% into the $35 strike call options expiring on the 16th of April. This way, the SLV purchases create a groundswell into silver immediately that then rockets through a gamma squeeze as SLV approaches $35. Price target of $75 for SLV by the end of April if the short squeeze happens. Alternative options are buying physical silver. This also works, but you pay a premium to buy and sell, so it's less efficient, and you take fewer silver ounces off the market because of the premium you pay. Going long futures for February or March, if you are rich and can actually take physical delivery of thousands of ounces of silver, by all means do so, but if you simply settle for cash, you're actually part of the problem. We need actual physical delivery, which is what SLV demands, and is why SLV is the way to go unless you're going to take delivery. Miners. I don't recommend buying miners as part of this trade. Miners will absolutely go up if SLV goes up, but buying them doesn't create the squeeze in the actual silver market. Furthermore, most silver miners only derive 30 to 50% of their revenue from silver anyway, so eventually SLV will outperform them as it gets high enough. And each marginal SLV dollar only increases miner profits by a smaller percentage. All right, so I'll let these kids, these Robinhood kids, these Wall Street Bet Reddit kids go and do that trade on SLV. I will hold the physical, and I will hold my positions in miners and explorers, because the miners and explorers are that call option, and I will get, as the price of the underlying metal goes up, I will get an exponential return on that. So it all started with Max Keiser tweeting out this, "Hey Wall Street Bets." So he's on Twitter, he's calling out to all the Wall Street Bets people, so the 7 million, soon to be probably 10 million people. The paper silver market, silver shorts, is 250 times the size of the physical silver market. Implied target of a short squeeze is $5,000 per ounce. And he shared this article, which we're going to have a look at. The paper silver market is 250 times the size of physical silver market. Bloomberg recently published an article on the discussions taking place concerning the establishment of a new fix on the silver price. The old fix will end on August 15, 2014, bringing potential consequences that I've already analysed. What is interesting in this Bloomberg article is not so much that discussions have taken place to determine a new way of fixing the price of silver, but rather the information about the scope of the silver market. The article states that the size of the global annual silver market is equal to $5 trillion. Bloomberg has always been a reliable source with their published data. Thus, it is interesting to compare the size of the silver market as announced by Bloomberg with the size of the physical silver market. And this is where things get interesting and really surprising. In a recent interview, David Morgan from the Morgan Report confirmed to me that the annual physical silver production is of roughly 1 billion ounces. In fact, I think First Majestic said it's about 900 million ounces now. So as I said, it's getting less and less. With silver trading around $20 currently, this represents a $20 billion market for physical silver. So the size of the physical silver market is of 20 billion. Now, remember, this article was published in 2014. So the physical silver market we know is probably, well, it's somewhere between 40 and 70 million. It's probably closer to the 70 million mark now because of the price of the bullion going up. Where Bloomberg is mentioning 5 trillion. So how can such a difference be explained? Well, these 5 trillion represents the entirety of the paper market, silver market, including all paper financial products, certificates, options, ETFs, etc., derived from the physical market, the real physical market, and allowing investors to be exposed to silver. This makes for a 250 to 1 ratio between the paper market and the physical silver market. This would mean that for every ounce of physical silver, there are 250 ounces of paper circulating in several financial products. So you've got 250 ounces of paper claims on silver for every ounce of silver that exists. In other words, one contract or certificate issued out of 250 would be convertible into physical silver. I guess I just said that. Should just read on, Steve. The disconnect between physical and paper or virtual markets is considerable. The financialization of the silver market is resulting in a leverage of 250 to 1. For now, as the regulation agencies are claiming, the goal is to create a new fixing for silver that would be better, that would better reflect the physical market, notably from pressure coming from countries like China wishing to have their say in the fixing of precious metals. The leverage between paper, silver, and physical silver is at risk of radically evolving. Let's hypothesize that the silver price would be directly based on the physical silver market. Today, the actual size of the silver market is, according to Bloomberg, $5 trillion. 5 trillion divided by 20 billion, which is the physical market, equals 250. 250 times $20, the silver spot price equals $5,000 an ounce. If the price of silver were based directly on the real physical silver market, silver's price should be at $5,000 an ounce. Now, this price may seem totally crazy, but who can pretend knowing exactly how an ounce of silver is worth? After decades of manipulation, turning real investors' demand from the physical market to the paper one, and years of exponential currency printing, or monetary printing, I guess, by all the planet's central banks. The actual spot price for silver has no real value and is not legitimate when we seriously compare the real physical silver market to the paper market and its myriad of financial derivatives. Now, I'm not saying the price of silver will reach $5,000 an ounce. I'm just saying that the actual physical silver spot price is not only extremely undervalued, but that it is an illusion compared to the real value of an ounce of physical silver, since it is totally disconnected from reality. Every investor holding silver in the form of financial products without the possibility of verifying the physical existence of their investments should ask the question as to what will happen when more holders of said products will ask for physical delivery. In reality, we know what will happen because one of the large banks from the Netherlands, ABN AMRO, already defaulted a little more than a year ago on its gold certificates by settling customers in cash. And this is where we're at. So we've got the silver market that has been manipulated for decades. We've got huge amounts of shorts, the paper claims on silver. They've just created them out of nothing. They don't exist. It's a fugazi. And it doesn't represent the true value of silver. And now what we've got is an army of Reddit, Wall Street bet traders, individual traders who are now coming together to force the price of silver up, which is going to create a squeeze on the bullion banks and on those probably hedge funds as well who have got short positions on silver to keep that price of silver down. And so when they have to start covering their positions and buying silver, this whole market could absolutely explode. So what price could silver get to? I think on its fundamentals, it's definitely worth somewhere between $100 and $300 an ounce, in my opinion. That's my opinion, not giving financial advice. But could what these Reddit users are doing push the price of silver up to $1,000? That's their target. That's where they're looking at. Or could it get to $5,000 an ounce? I don't know. I'm certainly not banking on it. I'm definitely investing in silver because I think it's severely undervalued just from a fundamental point of view. And I do see silver breaking its all-time high in 2021, which is right on $50 an ounce. And I do see silver in the next year or two being in triple digits, so hitting that $100 mark. That's my opinion, and that's why I've invested into this asset class, because I have this thesis of secular inflation, this stagflationary environment that we're going to go in. And so I believe that silver and gold, but silver more so because that's more undervalued, is going to play a big role in that thesis. But now we've got these Robin Hood kids who are like little martyrs out there. They aren't happy. They are angry. They're angry at the system. They're angry at Wall Street. They're angry for what happened in 2008, and they want payback. And these kids they're technical. They've got all these skills. They know how to use technology, and they now are using the techniques that Wall Street had against them. They're using what Wall Street does to everybody else. They're using them back against them. And so personally, I'm cheering them on. I hated what happened in 2008. And anyway, I'm all in. I hope these guys go hard as on the bullion banks, on Wall Street, on these people who create all these paper currencies to manipulate. They're not creating any value to society. They're not creating any wealth to society. They're not producing any goods and services which benefit society. They are creating paper contracts to trade, to manipulate, to just create billions of currency units for themselves in terms of dollars and profits, which they then turn and buy other assets. And they just gamble, and if things go bad, well, hey, Fed, government, taxpayers, bail us out. And so these kids are pissed, and I'm with them. So anyway, what do you guys think? Do you like the silver market? Do you think the silver market is about to take off? Do you think the silver market's undervalued, overvalued? Really love to see your opinions in the comments below. If you like this video, please click the like button. Really does help. Also, please share the channel with your friends and family if you like the content that I provide. Other than that, thanks for watching, and I'll see you again on another episode of Finance Uncut.